Good afternoon and welcome to your weekly personal finance segment. Today we'll be looking beyond health insurance and taking a look at benefits that are covered by employers. Joining me this week, as usual, is Michael Keating of InnerHarbor Advisors. Mike, good afternoon. Great to have you back.
Thanks, Remy. Thanks for having me.
Well, today we'll start out by talking about group term life insurance, and this does begin a series about benefits that are covered by your employers.
Right.
So first and foremost, tell us about this type of coverage and some of the tax consequences.
Sure. So one of the reasons we thought to do this segment is because it's one of the first things we talk about with our new clients. When we ask them about their life insurance coverage, they say, I already have it through my employer. So what does that mean if you have life insurance through your employer? And it basically comes down to two ideas. And it's all around who's paying the premium. Is it the employer? Is the employer paying for the life insurance, or is the employee paying for the life insurance? If the employer is paying for the life insurance, for the first $50,000 in benefit, there are no tax consequences. So that's on the first $50,000. For anything above that, that becomes income to the employee. So if your employer is providing, for example, 2 or 3 times your annual salary in a life insurance fringe benefit, you're going to be taxed on that premium as income. And for example, if your employer pays $100 in a premium, that becomes income to you. And if you're taxed at 35%, you're going to pay 35 cents in tax. Still a good deal. Employer providing $1 and you paying 35 cents for that dollar.
Mike, just to clarify that, there's a lot to go through. So what would you say is the main difference of life insurance carried directly by your employer versus not carried directly by your employer?
Oh, great question. If it's carried by your employer, that's a group policy. And so anybody in that group is going to receive the same rating regardless of their health. And life insurance, if you go out and purchase it individually, a big component of that life insurance, because it's not if you're going to die, it's when you're going to die. And the healthier you are, the less expensive it is to get life insurance. The more health problems that you have, the complications that you have, it's going to become more expensive. So with an employer-sponsored plan, a group plan, there is often no medical underwriting. For your own policy, there is medical underwriting.
I'm sure you get asked this question a lot, but what about coverage for a spouse or for any dependent?
It depends on the employer, and again, that's going to be a fringe benefit that's going to be offered outside the individual employee, so that's going to be taxable. If the employer is going to provide it, we still recommend you get it because, again, you're going to be paying income tax, which is only going to be a fraction of what the benefit is going to be. Speak to your financial advisor, speak to somebody who knows about life insurance, because there are a few instances where the group policy makes a lot of sense, and there are instances where it doesn't.
And last but not least, Mike, we've talked about the basics of this kind of life insurance that's covered by your employer, but what would you say in a nutshell to describe this kind of coverage?
Well, I could give you 2 examples. So we had one client. She was young and healthy, and she purchased extra life insurance through her company. And in that case, she was not doing a service to herself because she was paying a much higher premium because she was getting the group rate, which doesn't take into account her how healthy she was. Our recommendation to her was to, instead of buying the extra coverage through her employer, to go out and get an individual policy, which she was able to do through us. Another example was somebody who appeared very healthy, and when he talked to us about life insurance, he tried to get an individual policy through us, and he had trouble getting it because of some medical issues. His employer offered him the opportunity to purchase additional life insurance through the employer, and in that case there was no medical underwriting. It made a lot of sense for him to go through and get that insurance.
Well, Mike, hindsight is always 20/20, so it's always important to plan ahead and always important to talk to your personal finance advisor, as you mentioned. So thank you so much for clearing up this touchy subject and explaining what it's all about. Thank you very much.
You're welcome. Thank you, Remy.